2025 was always going to be a turbulent year, that much we knew. But what's happening right now with Donald Trump, few could have predicted, not at this scale. What began as a series of familiar political challenges has grown into something far more serious. It's no longer a set of isolated problems. It's a full-blown, sprawling crisis. Legal troubles, financial strain, political friction, institutional resistance. And here's the key. These issues aren't running parallel. They're feeding into each other, growing together, compounding, like a snowball rolling downhill, getting faster and heavier. The tension has reached such a point that even Warren Buffett, the famously reserved oracle of Omaha, felt the need to speak. And that in itself should give us pause. Buffett is known for avoiding political commentary. He doesn't make noise. He doesn't chase headlines. He rarely, if ever, comments on the personal finances of public figures. He's always stayed in his lane, steady, analytical, detached. You can count on one hand the number of times he's spoken up on something this charged. So when Buffett steps forward and warns that what's happening around Trump isn't just political drama, but something structural, even systemic, it's worth paying attention. According to him, the consequences of this moment go far beyond one man's legal challenges. They touch the foundation, the core systems that hold the country together. When someone like Buffett calls a situation systemic, it's a way of saying the entire structure, legal, financial, political, is under pressure. This isn't a glitch. This isn't something that can be patched up with a quick press conference or a well-worded statement. It runs deeper. And that's what has people concerned. Because if the foundation is being tested, if the basic rules are starting to feel flexible or unstable, the ripple effects can spread far and wide. So what exactly did Buffett say? He didn't lash out. He didn't name call or blame. That's not his style. He simply assessed the moment like a man reading a balance sheet and noticing where the math doesn't add up. What he described was something he called a cascading collision between two major forces, financial pressure and institutional resistance. That phrase might sound technical, maybe even abstract, but the idea is simple and unsettling. On one side, you've got growing financial pressure, mounting legal fees, bills piling up, assets being scrutinized. On the other, you have institutions, courts, regulators, prosecutors pushing back with increasing force. These two forces are now colliding hard. And in situations like that, you rarely get a clean resolution. What you get instead is unpredictability, chaos. And Buffett knows chaos is bad for markets, bad for stability, bad for decision making. The moment Buffett used that phrase, cascading collision, it caught fire. Analysts started unpacking it on financial news shows. Investors began wondering what it meant for the broader economy. Political operatives started imagining worst-case scenarios. Because when Buffett speaks especially about something this serious, people stop and listen. And that's what makes this moment so unique. The warning isn't coming from a pundit or a politician. It's coming from someone who's spent a lifetime studying how pressure builds and how systems break when that pressure isn't managed. To understand the urgency, we have to go back. The pressure on Trump didn't appear out of nowhere. It's been building for years, quietly, often behind the scenes. A lawsuit here, an investigation there, isolated at first, manageable, but 2025 has changed the pace. The pressure isn't trickling in anymore. It's pouring. What makes it especially complex is that the legal challenges span multiple states, different jurisdictions, different types of law. Some are criminal, some civil, others regulatory, and every single one requires massive resources. Legal defense at this level isn't just expensive, it's relentless. Picture this, dozens of attorneys, legal teams working around the clock, full law firms engaged just to handle the daily workload. This isn't a matter of hiring a couple of lawyers and hoping for the best. We're talking about lawyers billing thousands of dollars per hour, associates conducting research, paralegals managing mountains of paperwork, expert witnesses preparing detailed testimony. Every day brings new motions, depositions, filings, discovery requests, each one requiring attention, planning, strategy. And that's just the courtroom side. Outside the courtroom, there's another battle. Public opinion. In a case this high profile, legal arguments aren't enough. You need media strategy, press releases, TV appearances, social media messaging. Every headline needs a counter-narrative. Every leak needs a response. And that constant fight in the courts and in the public eye eats up time, money, energy. It stretches everyone thin, especially the person at the center of it all, because none of this can be outsourced completely. Decisions need to be made. Strategies have to be approved. Documents reviewed. Statements crafted. The spotlight never dims. All of this, the legal chaos, the media pressure, the financial strain creates a cloud of uncertainty that now hangs over Trump's entire world. His finances, his political future, his business interests, they're all caught in the storm. Each new case adds a new complication. And it's not just the number of cases, it's the way they compound. The complexity multiplies. That's the danger. It's not any one lawsuit that threatens to bring everything down. It's the weight of all of them together. Warren Buffett compares it to a person carrying too many heavy boxes. One or two, fine, manageable. But when it's 5, 6, 7 boxes and more keep coming, something eventually drops. And once you drop one, the rest become harder to hold. That's what Buffett sees now. Not just legal risk, not just financial strain, but structural overload. And when someone who spent 60 years studying how financial pressure topples, even the biggest companies, sees that kind of strain building in real time, we should listen. What's even more concerning is how tightly everything is now connected. The legal issues fuel financial strain. The financial problems create political weakness. That political weakness leads to more legal scrutiny. And on and on. It's a loop, a feedback cycle. And feedback loops are dangerous. They start slow but accelerate quickly. What takes months to build can fall apart in days once the loop starts spinning. That's the real warning. It's not about one big collapse. It's about the cascade, one thing triggering another until it's too late to stop. We don't know how this ends. Nobody does. Not even Buffett. We've never been in a situation quite like this before. Not with this much complexity. Not with this much at stake. But Buffett knows this. When pressure meets resistance and no relief comes, something gives. The structure shifts. Sometimes it bends, sometimes it breaks. Either way, the consequences ripple out far beyond the immediate headlines. And that's what makes this more than just another news cycle. It's a test not just of one man, but of the systems we all rely on. So as 2025 unfolds, one thing is clear, we're in the middle of a story that's still being written. The outcomes aren't clear yet, but the warning has been issued. The snowball is rolling. And when Warren Buffett breaks his silence to say something's not adding up, the world would be wise to listen. There's something financial analysts keep pointing out, something that often gets overlooked in the broader public conversation. Legal battles at this level don't just drain millions of dollars. They change the shape of entire financial portfolios. They force you to reevaluate everything you own. You start asking hard questions. What can I sell quickly? What's actually liquid? Which assets are tied up in ways I didn't expect? And all of this happens under pressure, with the clock ticking and invoices mounting. It's not strategic. It's reactive. It's not about long-term planning anymore. It's about survival. You're no longer playing chess, thinking 3 moves ahead. You're playing whack-a-mole, reacting to whatever jumps out next. That's what Donald Trump is now facing. But in his case, it's even more complicated. He's not just navigating financial stress. He's operating in 3 massive high-stakes arenas all at once: politics, business, and media. Each one is a pressure cooker on its own. But when all 3 start heating up at the same time, the complexity becomes overwhelming. It's like trying to balance 3 spinning plates on one hand while juggling flaming torches with the other. Warren Buffett looked at this multi-front pressure and explained what worried him most. It wasn't the politics. It wasn't about left or right, party lines, or campaign slogans. It was the pattern, the structure, the way this whole situation is unfolding. He used an analogy that stuck with a lot of people. He compared it to a dam under rising pressure. Think about that for a second. A dam is designed to hold back massive amounts of water. It's engineered to handle stress. But every structure has its limit. At first, you might notice a small crack, a tiny fissure. Some water starts seeping through. Nothing dramatic. It seems manageable. You tell yourself it's not urgent, can be patched later. But the pressure keeps building. The water keeps pushing. The cracks get wider. The trickle turns into a stream. The structure groans under the weight. And then with very little warning, it gives way. Not slowly, not gracefully, suddenly, catastrophically. That's what Buffett sees now in Trump's financial situation, a dam under pressure close to its limits. And remember, Buffett isn't someone who leans into drama. He's known for staying calm, measured, often cautious in his forecasts. But when someone like that starts describing structural cracks and rising pressure, it's time to take notice, because behind the scenes, the strain is already visible. If you know where to look, the signs are all there. Legal teams are stretched to the edge, juggling multiple cases, managing deadlines, coordinating messaging. Many of Trump's advisors are clocking 80-hour weeks just to stay ahead of the chaos. At the same time, businesses associated with Trump, either directly or indirectly, are facing more scrutiny. Regulators are asking tougher questions. Banks are tightening their terms. Business partners are slowing down decisions or walking away quietly. Nobody wants to get caught in the fallout. Legal fees continue climbing at an alarming rate. Not a one-time expense. We're talking about tens of millions of dollars per month just to keep everything moving. And donors, even loyal ones, are getting cautious. They're watching closely, trying to figure out just how deep this goes. Within political circles, there's a shift happening. You don't hear it in public speeches. You hear it in private strategy sessions, whispered in hallways and closed-door meetings. Even longtime allies are admitting that the environment around Trump has become more unstable than ever before. And that's saying something, because unpredictability has always been part of the Trump brand. But this is different. This is not chaos by design. It's not disruption as a strategy. This is uncertainty created by mounting uncontrollable pressure. Buffett pointed out something subtle yet critical. He said the most dangerous kind of financial stress isn't the kind you read about in headlines. It's the quiet kind, the type that builds in silence. It accumulates not in big scandals or dramatic court appearances, but in spreadsheets, bank statements, and mounting invoices. Behind closed doors, away from cameras, and then suddenly the consequences burst into public view and everyone acts surprised, even though the warning signs were always there. Financial trouble, Buffett said, is like a shadow. It follows you whether you see it or not, whether you acknowledge it or ignore it. It doesn't go away. It just stretches longer as the sun sets until one day you can't ignore it anymore. That metaphor stuck, because what we're seeing now is a shadow growing longer and darker with each passing week. And most people aren't watching closely enough to realize what that means. The real issue here, the part Buffett and other economists are fixated on, is the feedback loop. This isn't just one problem multiplying. It's a cycle, a trap. Let's break it down. First, the legal battles intensify. More lawsuits, more investigations. That means more legal fees. That puts a financial strain on Trump's resources. That financial stress, in turn, limits his political options. Campaigns need money, they need staff, they need flexibility. When the money tightens, the campaign narrows. Political vulnerabilities grow. Those vulnerabilities invite more scrutiny. Prosecutors sense weakness. Regulators see an opening. Institutions that once held back start moving forward. And that, of course, leads to more legal challenges. Around and around it goes. Legal problems feed financial stress. Financial stress feeds political vulnerability. Political vulnerability triggers more institutional pressure. And the whole cycle reinforces itself faster every time. Buffett compared this to compound interest, except in reverse. Normally, compound interest is a good thing. You earn a little, and then you earn interest on your interest. Over time, it builds into something powerful. But when the problems compound, when each issue spawns more problems, the spiral tightens fast. It becomes harder and harder to escape. You start running out of resources, out of time, out of room to maneuver. That's when things become truly dangerous, not just for Trump, but for the entire system trying to absorb the pressure. The question is no longer whether Trump is in trouble. The question is what happens if or when that trouble spills over. Because if this pressure keeps building, If this convergence continues unchecked, we're not just looking at one man's downfall. We're looking at a moment that could reshape parts of the political and financial landscape. And Buffett knows from experience, moments like that don't resolve themselves. They either trigger reform or they trigger collapse. There's no middle ground when the pressure gets this high. Political analysts, serious, seasoned observers who've spent decades studying how power works, have started describing Trump's position in striking terms. They're calling it one of the most volatile crossroads of law, finance, and politics in modern American history. And when they say modern American history, they aren't talking about the last few years. They mean decades, generations. Why? Because the stakes now reach far beyond Trump's personal fate. Every development carries national implications. Every headline creates ripple effects. Every legal update shifts public perception, market confidence, and political alliances. It's a moment where even small changes in Trump's situation can send shockwaves through political networks, financial markets, and institutions trying to maintain stability. In today's climate, a single public statement can create market movements within hours. A post on social media, a comment during a rally, a sentence in an interview, any of it can trigger immediate reaction. Investors adjust their positions. Allies reassess their strategies. Journalists shift their narratives. A courtroom ruling can change the political temperature overnight. A dismissed case sparks momentum. A guilty verdict sends campaign teams scrambling to adjust. An appeal filed in one jurisdiction can suddenly alter the timeline in another. And legal deadlines, those relentless, immovable markers, keep coming. They don't slow down when a campaign ramps up. They don't pause for political events. They just keep landing, one after another, forcing decisions, draining time, and reshaping strategy. This means Trump's political machinery is now forced to operate in a state of constant adjustment. You can't plan 6 months ahead anymore. You can barely plan 6 weeks ahead because the ground shifts beneath your feet almost daily. Campaign budgets must be recalculated constantly. Every dollar counts. Teams have to decide where to cut, where to invest, how to keep momentum despite legal bills that could spike again next month. Donors, especially large institutional donors, are now calculating risk differently. Big donors aren't emotional, they're strategic. They want stability. They want predictability. And when things become uncertain, they hedge, they pause, they watch instead of act. Advisors, meanwhile, are preparing for financial scenarios that would have seemed impossible just a short time ago. Backup plans now have backup plans. Entire playbooks have been rewritten to account for outcomes once considered far-fetched. And allies, this is where the political reality gets delicate, allies must decide whether to tighten their support or quietly step back. Some remain committed, standing close, speaking loudly, pushing the narrative that all of this is political persecution. Others, however, are creating distance, not loudly, not dramatically, quietly. Fewer public appearances, softer language, carefully worded statements that show support, but not too much support. It's human nature. When a ship starts taking on water, some people reach for buckets and others look for lifeboats. Now, something important needs to be understood about Buffett's analysis. It was not aimed at weakening Trump. It wasn't a political attack. It wasn't about influencing an election or swaying public opinion. Buffett has no interest in playing that game. His warning was directed at the country, at the systems we rely on. Because financial instability at the very top of a major political movement doesn't stay isolated. It spreads. It creates uncertainty throughout the entire structure. And uncertainty, Buffett has said for decades, is the single greatest enemy of economic stability. Here's how that uncertainty spreads. When investors see instability at the top, they become cautious. They begin asking questions about risks they haven't considered before. If someone at this level with this much wealth, influence, and infrastructure can be pushed into financial fragility, then what else might be vulnerable? That cautious mindset leads investors to move money into safer assets. They hold back instead of spending. They wait instead of committing. Businesses follow a similar pattern. Companies that were planning to expand, hire, build, or launch something new suddenly hesitate. Growth slows because uncertainty makes long-term planning risky. When businesses pause, institutions brace. Banks tighten lending. Regulators increase oversight. Federal agencies start running more scenario analyses. The entire system subtly shifts into defensive mode. That shift may not be visible to everyday observers, but Buffett sees those patterns instantly, and he knows the ripple effects better than almost anyone alive. Because uncertainty doesn't just affect investors or politicians, it affects everyone. Buffett has always taught one principle. You can deal with high interest rates, inflation, recession, because those things can be measured and planned for. You can forecast them, you can adapt to them, but true uncertainty, the kind where nobody knows what tomorrow brings, freezes movement. It stops capital. It paralyzes decision-making. And that's exactly what he warned about here. Not chaos, not collapse, but uncertainty, a broad, growing uncertainty at the intersection of law, finance, and politics. And this uncertainty raises deeper questions. Can the legal system handle pressure at this magnitude without bending or breaking? Can financial institutions maintain stability when political turmoil bleeds into markets? Can political structures stay intact when a leading figure faces overlapping crises on multiple fronts? These aren't partisan questions. They're structural ones. They touch every corner of the country. They affect not only elections, but the flow of capital, the confidence of markets, and the decisions made in boardrooms and living rooms every day. Buffett wasn't predicting disaster. That's not who he is. What he was saying is simple but serious. Pay attention, watch closely, understand what's happening. Because in moments like this, moments where financial pressure and institutional resistance collide, where crises compound, where uncertainty spreads, outcomes don't quietly solve themselves, change becomes unavoidable. Sometimes it comes slowly through negotiation and restructuring. Sometimes it comes suddenly through political shifts or legal turning points. And sometimes it comes in ways nobody sees coming. What matters now is recognizing that we're living through a moment where all three major systems, legal, political, financial, are under simultaneous stress. And when that happens, the effects don't stop at the top. They move downward. They spread outward. They influence everything from national policy to local business decisions. They shape the tone of the economy and the confidence of the public. And that's why Buffett spoke up. Because even though this story centers on Trump, the consequences extend far beyond him. We're all in it, whether we follow politics closely or not, whether we support Trump or oppose him, whether we invest money, run a business, or simply watch the news at night. This moment affects the entire landscape, and what happens next will shape the years that follow. That, Buffett says, is the real story. Warren Buffett didn't stop with a general warning. He went further. He spoke directly to the broader implications of what might happen if the pressures surrounding Donald Trump keep building at the current pace. And this is where the seriousness of the moment becomes clear, because Buffett's concerns weren't limited to political disruption. He pointed to something far more widespread, the potential for economic turbulence rooted not in interest rates or inflation, but in political instability. Think about that. We're used to market volatility caused by traditional financial factors, inflation, employment numbers, trade policy, consumer spending. We have tools to deal with those. We know how to respond. But political instability is different. It's unpredictable. It's fast-moving. It doesn't follow market logic. And it's hard to hedge against because you're not just dealing with numbers anymore. You're dealing with public perception, court rulings, legal delays, sudden announcements, and shifting alliances. That kind of volatility creates ripples that reach far beyond the headlines. Buffett laid it out clearly. When the highest levels of political power become unstable, markets notice. And it's not just traders on Wall Street watching stock tickers. It's pension fund managers, retirement planners, CEOs, small business owners. It's everyone who relies on economic predictability to make decisions. Confidence is what keeps business investment flowing. It's what keeps companies hiring and expanding. When that confidence wavers, decision-making slows, projects are delayed, capital is withheld, and that slowdown, even if gradual, starts to drag down broader economic performance. We're already seeing signs of this. Some business leaders are quietly postponing expansions. Real estate projects are being delayed, not because the economy is weak, but because the political environment is too uncertain. Executives are reevaluating assumptions they made just months ago. What seemed safe no longer feels certain. What once looked like a sure bet now feels risky. And this mindset caution, bred by uncertainty, spreads faster than most people realize. And here's the crucial part. The source of that uncertainty is no longer strictly economic. It's political, legal, structural. It's coming from the convergence of multiple crises, each amplifying the others. That convergence is what Buffett emphasized again and again. He wasn't making predictions for the sake of drama. He was describing a pattern, one that he's seen before in other contexts, one that rarely ends without significant consequences. He reminded people of something simple but powerful. Real collapse doesn't start when it becomes visible. It starts long before in silence. The cracks, he said, begin where nobody is looking. A spreadsheet that doesn't balance, a delayed payment, a strained advisor. These small stress points accumulate quietly. They don't get headlines. They don't spark panic, but they erode the foundation. And then, seemingly all at once, the structure fails. Not because of one sudden blow, but because the pressure has been building for far too long. That's the part that gave many listeners pause, because what Buffett was describing wasn't theoretical. It was happening in real time. He wasn't speaking in the abstract. He wasn't drawing from some academic framework. He was outlining a real-world pattern he believes is unfolding right now in 2025 around the Trump crisis. The quiet accumulation of stress, the slow erosion of financial and institutional stability, the convergence of legal, financial, and political forces all hitting the same pressure point. This, he said, is what makes the moment dangerous. Not the individual parts, but the way they're combining, reinforcing each other, pushing harder together than they ever could separately. And that word convergence matters. It's not just about multiple pressures happening at once. It's about them colliding at the same spot, amplifying each other. In finance, pressure that grows slowly can be managed. You can adapt. You can increase capacity. But pressure that converges suddenly, sharply, is different. It hits all at once. Like being struck by multiple waves at the same time. You can't brace. You can't recover. You can't plan in between. You're simply overwhelmed. That's where things get unstable. And Buffett, with his long history of analyzing corporate collapses and market breakdowns, knows the signs. He's watched companies buckle under similar patterns. He's seen how leaders ignore the early warnings, hoping things will self-correct. But in cases like this, with converging legal cases, rising financial costs, political fallout, and public scrutiny, the margin for error shrinks dramatically. Every step has consequences. Every misstep can trigger a chain reaction. And right now, those reactions are becoming more visible. Legal firms involved in Trump's defense are stretched to their limits. Business operations tied to him are facing tighter reviews. Donors are evaluating risk in real time, trying to decide if more contributions are worth it. Political allies are watching the polls, watching the legal dockets, watching the donor base, and quietly recalibrating. Some are still committed. Others are hedging. Everyone is adjusting to the new normal, a political campaign unfolding under legal siege. Meanwhile, the media landscape adds another layer of pressure. Every court filing is dissected in real time. Every public appearance is turned into a signal. The 24/7 news cycle amplifies each twist. And in that environment, it becomes nearly impossible to stabilize the narrative. One day of quiet progress can be undone by a single headline. And that volatility, legal, political, media-driven, takes a toll on strategy, on morale, on momentum. It becomes harder and harder to make the next move without second-guessing what it will trigger. So now, advisors must manage not only legal complexity and financial stress, but also communication strategy. They have to plan for every angle, every possible interpretation, every potential backlash. And that kind of messaging environment requires immense discipline, precision, and speed, which in turn requires resources. Which brings us right back to the feedback loop. More pressure requires more response. More response requires more money, more energy, more people, and eventually those resources run thin. Buffett's core message was clear. What we're seeing now is a structural test, not just for one campaign or one individual, but for the resilience of American institutions under compounding pressure. What happens when a political figure is pulled simultaneously in every direction by the courts, by regulators, by financial demands, by public perception? What happens when the normal rules don't apply anymore, when every system touches every other system? That's the question this moment is forcing us to ask. Because this isn't just about the outcome of a trial or an election. It's about what happens when systems collide and whether the foundations we rely on are strong enough to absorb the impact. Warren Buffett emphasized something in his final remarks that gets to the heart of why this moment is so critical. He said the real danger isn't in any single lawsuit or political loss. It's in the accumulation, the layering of smaller pressures that together become too much to bear. He compared it to building a house of cards in reverse. Every new card, every new case, every new investigation, every new expense makes the whole structure shakier, not stronger. And as more cards stack on top, the ability to move or adjust disappears. Eventually, it's not a matter of if something gives, it's when. And this isn't theoretical anymore. Political strategists, the kind who usually avoid dramatic language, are calling Trump's situation one of the most unstable alignments of law, finance, and power in modern times. That's not political theater. That's a technical analysis of risk. Because what we're witnessing isn't just a legal battle or even a political fight. It's a systems collision. Every public statement, every legal ruling, every financial disclosure now carries national weight. A comment at a rally could impact donor confidence. A court date could derail an entire campaign strategy. A single filing can change the public's perception overnight. That kind of constant pressure forces campaigns into a reactive stance. You stop planning 6 months ahead. You stop thinking in normal cycles. Instead, you make decisions based on survival. Fundraising becomes harder. Messaging becomes tighter. Allies grow cautious. Donors, especially big donors, become hesitant. And when major political donors get nervous, they don't wait around. They don't need to make speeches. They just stop writing checks. Quiet exits, not public ones. And it's not just the campaign feeling the weight. Businesses connected to Trump, both directly and through partners, are recalculating. Legal reviews are intensifying. Regulators are asking tougher questions. Contracts are being re-examined. Credit terms are tightening. Even long-standing partners are moving more slowly. Not because they've changed sides politically, but because risk has entered the equation in a new way. When uncertainty grows, business slows, people wait, they watch, they hedge. This is exactly the kind of economic ripple effect Buffett has warned about for decades. When financial instability becomes personal, when it wraps itself around a high-profile political figure, it doesn't stay personal for long. It spreads. It touches institutions, markets, investment strategies. It creates second-order and third-order consequences that are impossible to fully model. That's the danger. Not that the system breaks all at once, but that it bends in ways we don't anticipate until it's too late to course correct. Buffett made another point, one that, frankly, caught people off guard. He said that uncertainty doesn't just threaten financial systems. It threatens confidence itself. And when confidence drops not in one person, but in the structure of institutions, that's when things start to truly destabilize. Because markets, politics, and public behavior are all built on confidence, on belief that tomorrow will be at least somewhat predictable. When that belief fades, everything slows down. Money pulls back. Planning stops. Movement freezes. He made it clear this isn't a partisan warning, it's a structural one. What happens when you have intense financial stress, multiple overlapping legal fights, and political volatility all feeding into each other? What happens when public figures, institutions, and businesses are caught in a loop that none of them can control. And most of all, what happens when it continues long enough that the foundation underneath starts to erode. Buffett didn't offer solutions. That's not his job. He doesn't tell governments or campaigns what to do. But he knows what pressure looks like. And more importantly, he knows what collapse looks like and how it begins. Quietly, gradually, invisibly, until it doesn't. Until everyone sees it at once and realizes it's too late to fix. He warned that the dam doesn't break when the water spills over. It breaks long before that, when the pressure builds behind the scenes, unnoticed or ignored. When reports are filed but not read, when stress is visible only to those who know where to look. And when that moment comes, when the weight becomes too much, it never happens slowly. It happens all at once. And that's where he believes we are now. In a moment of converging pressure, legal cases building, financial structures shaking, political machines straining, and the feedback loop spinning faster, not just for Trump, but for the systems around him. Campaign staff, legal teams, financial institutions, party leadership, regulators, all caught in a pattern they didn't design and can no longer fully manage. Buffett wasn't predicting a crash. He was identifying a moment when all the usual indicators point in the same direction, toward instability, toward fragility, not because any one part is broken, but because all the parts are colliding at the same time. And when that happens, no one knows exactly what comes next. Not even someone with decades of experience predicting market movements and financial downturns. So where does that leave us? With a reality we can't ignore, that the pressures surrounding Trump in 2025 have grown too complex to separate, too big to dismiss, too interconnected to isolate. Legal battles lead to financial strain. Financial strain leads to political vulnerability. Political vulnerability invites institutional pushback, and all of it loops back again, reinforcing itself with more speed each time around. That's what Buffett saw. Not a moment of scandal, but a moment of systemic stress, a convergence that threatens not only one person's future, but the very predictability that modern systems depend on. Whether you're a voter, an investor, a policymaker, or just a citizen trying to make sense of it all, this moment matters. Because it's not just about Donald Trump anymore. It's about how resilient the systems we all rely on truly are. It's about whether they bend and recover or bend and break. And if the Oracle of Omaha sees that question as urgent enough to speak up, we should all be listening